Hey, what's going on, guys? Nice to see you guys here this morning. Good morning. My name's OG, and welcome to the Place Your Trades Network. This morning, my guest is Michael, and we're going to be talking about psychological pitfalls and how to avoid them. Today's podcast is brought to you by Tradeovate, which is a built-in custom app dedicated to trading event contracts. This is what we're all using at Place Your Trades. Use the link in the chat. Start trading in the Tradeovate web app for free to follow along and make your own picks. Please make sure to like and subscribe to our channel and set notifications so you never miss our podcast, and that's very much appreciated. As always, let's see what we've got. We got Michael in the house. We're going to be talking about these psychological pitfalls. How are you doing today? Did you survive CPI?
I did survive CPI. Thank you very much for asking. That was some fade yesterday morning, but I'm doing really well. Excited for a really nice trading day, and hopefully Papa Powell's got some fun in store for us today.
Papa Powell, I love how you say that. All right, so, with CPI behind us, we've got FOMC today. We're going to be talking about some event contracts, of course, because that's why we're here. But before that, a little bit of, this is only my third show. And like I talked to you in the morning just now, that there's probably those that don't understand my background. And I come from a military background where we're very disciplined. A lot of the psychology that goes into trading can be pulled in from that type of environment, from having to be a non-commissioned officer and really making decisions on the fly and understanding that you have to learn from your mistakes. You have to learn from some of these trip ups that you're going to have and not beat yourself up, because you have to stay in the game mentally and also learn when to take breaks and have some self-care and be able to preserve some of that mental capital. So what are your thoughts on some of these pitfalls that newer traders are having as far as either whether they just started in COVID or whether they're just starting now?
Yeah, I think a lot of it is there's a lot of really unrealistic expectations on what successful trading actually looks like. Successful trading isn't about necessarily making $1 million in one trade. Like, you're going to need to be trading ridiculous sizing to have one trade basically make or break your career, right? So the objective that I think a lot of traders struggle with is that it's actually a long-term game where maybe you're going to be successful 75% of the time. And as long as you're able to sort of maintain that discipline and have that sort of structure to your trading system, then you can make quite a lot of money on that 75%. But it's understanding that you are going to lose, that you are going to take some hits every now and then, and that those trades can't essentially break you. If they do, then you're not going to have a very long career. And I think FinTwit and sort of social media really brings out the worst in that for a lot of people, where you see the Lamborghinis and the mansions and the
Absolutely.
really easy lifestyles that people pretend that this is like a really easy game. And the second that they aren't able to get that instant success, then they think, oh my gosh, I'm not smart enough, I'm not good enough. They create this sort of negative self-talk that then kind of compounds and works against them. So for me, I think that's really where a lot of people start off sort of in the wrong foot, is where they think it's a game where you're supposed to make a lot of money, where it's, for me, I think trading is a game where it's about self-improvement, and then the money is sort of the reward for you leveling up your life.
Absolutely. I mean, I couldn't have said it better myself. Like, I'm in the same mindset. And I think that's what makes successful traders, like you're saying, is you enjoy the process. You don't enjoy necessarily the outcome all the time, because the outcome could be negative. You
Yeah,
could lose,
I
right?
can have a
So
perfect trade and a
absolutely.
negative outcome and be happy with that result.
Right. Because you're enjoying that process and you're staying disciplined within your own process. So I do like to talk about how this self-improvement and this process is you have to take it almost as a scientific approach, because a lot of newer traders, whether it is a psychological pitfall or whether it's just they don't know what's going on, that they just throw stuff at the charts or at the wall and see what sticks.
Mhm.
And so to take that scientific approach and understanding that there's a process to it. So what is your take on the actual process? You got to have your basic rules and be disciplined with them, and then start to expand and explore. What are your thoughts on that?
Yeah, I'm going to paraphrase a quote a little bit, but I mean, going back to your like military background, Patton in World War II said that like kind of amateurs think about tactics and winners think about logistics and planning. For me, that's kind of the same way with trading. The more I'm able to sort of plan out, the more sort of deliberate I'm able to be with my actions and consistent in those actions, it's easier for me to then learn from those mistakes. So if I, have a consistent strategy, a consistent risk management approach, consistent logic on how I want to enter trades, if I'm tracking those and sort of studying all those plays, I will notice patterns of where I'm making mistakes. And those patterns will show up in the same spot if I'm consistent in my application. So then it becomes really easy on, okay, this is what I need to fix. Okay, maybe my entry timing is a bit off, or maybe my position sizing is too big. So it's easy for me to then see what I need to work on, what I need to sort of change, and then make those changes, plug that gap, right? Plug that hole, and then see what the next sort of issue is. And it's sort of that constant recycling, right? Because there's no such thing as perfect trading. You're never going to get the most out of every single play. So it's how can I learn from each trade, win, lose, or draw? What sort of lesson can I take? What sort of pattern do I notice that I'm making that can help me maybe become a better trader? And that's not necessarily just a technical skill set either, right? It's about when I size my positions this much, maybe I start to feel more anxiety. Maybe I start to notice more of my emotional triggers, and noticing where your sort of anxiety comes in a trade, at what point in your process can maybe make you realize that, hey, this part before that isn't as strong as it needs to be, or I need to work on this so that I don't feel that anxiety when I actually take my trade. And it's basically about trying to make as many proactive, not reactive decisions as possible.
Oh, that's awesome. That's beautiful. I couldn't agree more than that. And not only analyzing it subjectively, or not subjectively, I'm sorry, analyzing it objectively, where you're not beating yourself up. You're taking these lessons and learning from them without having that negative self-talk that then drives that anxiety before you enter a trade, because you could have that perfect plan and you do know what you're doing. Ultimately, you know what you're doing because it's worked before, but you have this negative self-talk from all of these bad trades. Well, not necessarily bad trades, but trades that did not go in your favor. And so all of a sudden you're like, I'm an idiot. I don't know what I'm doing. I can't do this. Should I quit? Should I, and subconsciously all that just weighs on your shoulders. So it's almost like a self-fulfilling prophecy that you then don't take the trades that were winning trades. And then those winning trades, you beat yourself up for not taking because you already had that anxiety from all that negative self-talk, and it just piles and piles and piles. So how can we get out of that?
And then you're in a situation where you can't win, right? Because the trades that you take that then don't work against you because your position sizing is too big or you're too nervous in it. And then the ones that do work, you're cutting it early because you don't have the confidence that it's going to run out. So the way that you fix this, right, is one, start writing down everything. Start writing down exactly how you want to, like what your setup trigger is, exactly what you want to see before you enter your play. Think about your position sizing. The majority of your sort of anxiety comes from you risking more than you're willing to sort of risk, right? And then the other element is defining how much you're actually going to lose or make. So the sort of analogy I like to use, right? If I hired someone to redo my bathroom in my apartment, right, and they didn't give me a quote before I hired them, I'm an idiot if I'm surprised that the bill is past my expectations when the contractor's done, right? It's the same thing with trading. If I know how much I'm going to lose when I'm supposed to stop out, it's easier for me to accept the terms of that deal because I was prepared for it. But all of a sudden, right, if I don't know what that number is going to be, or I'm unsure of sort of where my P&L is going to be at that spot, then it's tough for me to sort of accept that outcome because I'm no longer trading for a process, right? I'm trading as an outcome-based objective. And that makes it impossible for me to then accept a red trade. Or if I do accept it, my next reaction is to then try to revenge trade it and make my P&L back by flipping my thesis or doing something along those lines. So, it goes back to defining out everything, right? Tracking everything, being really, really deliberate in all your actions, and, understanding that, hey, the more responsibility I take for my decisions, the more success I'm going to have trading.
Yeah, absolutely. And a theme that you've been talking about over and over again is risk, position size, being risk on, being risk off. How would you define that as, it is different, and it's hard to have a blanket statement because everybody's position size is going to be slightly different, and you are going to have to come up with something that's comfortable for you. But is there something that you would tell newer traders as far as their portfolio and what are your thoughts on the risk management as a whole?
Yeah. So generally my rules, I never want to lose more than 1% of my account after stop loss. So I size all my positions to sort of stay within that sort of boundary. My beliefs and sort of the way that was sort of, stressed to me when I was learning how to trade institutionally was that the smaller that your position sizing is when you're starting out, the easier it is for you to survive your learning curve because you've got more chances to strike out and still stay in the batter's box. So for me, that's really, really important. And then ultimately, right, everyone has a different number that breaks them. So maybe some traders start to kind of get that like out of body experience when they lose $100. For some people, it's when they lose $100,000. So it's different for everyone. And, I would say again, it's sort of being proactive to make sure that you're sizing your position. So hitting that number that breaks you is impossible, right? It basically put yourself in as many situations where this can't happen, because once I get to that point where I'm having that out of body experience, where I'm kind of like making blacked out decisions, then I can't trust any of the sort of protocols. Like there's nothing that can make me a better trader or give me better psychology when I'm actually in a position. I can only sort of manage it beforehand and then trust my plan. And if I ignore my plan, then mistakes can compound exponentially and really hurt me. So I have to have that discipline and that trust that if I follow it, this is how it works out.
Yeah. If I would have known this, and if I would have had you in my corner when I first started, because as we talked right before the show, we came from slightly different background. Well, not slightly, but we came from different backgrounds. What's that?
Same background, different, like same coin, different background. Like
same coin,
heads,
different
tails kind of thing.
Yeah, absolutely. Because I came from the fundamental side of it, and I wasn't able to break into the trading side of things with you got to be in with the boys to be able to trade. And so I tried to strike out on my own. So I didn't have that background. I didn't have somebody to tell me, hey, your position size is important. Your risk should be at the top of the forefront of your mind, where you need to know what you're willing to lose and then be okay with it. And if you're not okay with it, then you need to reduce your position size even more. It would have saved me so much heartache.
And it's a choice.
Yeah,
right? It's a choice.
Absolutely.
So like being a disciplined trader is a choice. Same as being an undisciplined trader. Like the more that you can put yourself in situations where you're understanding that I'm fully accountable for everything, it makes you break down and think about each step of a trade before you take it, right?
Yeah.
Like mistakes love a rush decision. So if you feel like you're chasing price, you're chasing price action that isn't suitable for you, maybe someone alerted a trade and you want to jump in. Well, the second you start chasing, the risk reward's no longer in your favor, right? The risk management that where they set is no longer in your favor. Like the numbers game is now working against you. So the more deliberate that you can be, the more in control that you can be, the easier it is to be profitable. And if you're talking yourself out of trades, if you're avoiding your losing plays, if you're doing these sort of things that make it easier for you to be green, then you're going to be green a lot easier than if you just traded everything that was interesting to you, right? Not every idea we have is going to be correct. We're going to lose a lot. We have to almost be like corners in the NFL where when we get beat, right? Like, okay, no big deal, because the next pass that sails 30 feet over my head, I'm wagging my finger in your face like nothing happened. Like I need that unrelenting self-confidence that, hey, if I trust my process, everything's going to be okay. But the second I stop kind of, following my rules, I stop sort of cheating my discipline, then everything falls apart.
Absolutely. And, we did just talk about two sides of that coin. And I use the same NFL reference, but you used a corner. I use the reference as a quarterback, because quarterbacks, they have to read the entire field. They have to be able to read what the defense is giving them. And that's almost like trading, where you're trading against somebody else. Your own process is your own process, just like a quarterback. And reading what other people are doing is important. But then when you throw the ball and it's out of your hands, you've already taken that trade. They've already tossed that pass. If it gets intercepted, you still read it right. You still had the right look, but you got intercepted. You have to shake that off. You have to still have that confidence that you're talking about with the corner as well. You have to have that unrelenting self-confidence without the ego. And that's the separation that I think that's another psychological pitfall with newer traders. It becomes very egotistical, where they have to be right. And I know we did talk about that before the show. So what are your thoughts? Because FinTwit is just full of ego, and it's just oozes ego. That
it's exhausting.
How do we get out of that as well?
Yeah. So for me, I have a big ego in trading when I attach my ego to my P&L, right? When I'm dependent on the outcome to be happy with my trade, then that's where my ego gets attached, right? Because I never take a trade thinking that, hey, I'm going to be wrong on this play, right? I've never taken a trade thinking I'm going to get stopped out on this. I always think I'm going to be green, and I'm going to be green right away. So the objective, right, is to basically understand that you have to protect yourself from yourself, and you can't be too attached to, hey, okay, if my P&L is $1,000, I'm a great trader, I'm a fantastic trader. Not like that. Who knows what that actually means, right? If you made $1,000 averaging down, and then you got a little bit of a pullback, and all of a sudden now you're a little bit green, you didn't make a good decision. You got bailed out, you got lucky, and you're relying on the outcome to tell you that, hey, your process was good. It justified your process. So it's detach yourself from the outcome, right? Think about my outcome will not be perfect on every trade. I'm going to have a lot of variance there, but my process can be perfect and I can learn something from each process. So if you want to detach yourself from the ego, you want to avoid the ego, unfollow the accounts that sell you the Lamborghinis and the easy lifestyle, right? Focus on the variables that you can control, focus on the things that are in your sort of hands. And then, detach yourself from the P&L, because the P&L will only happen if your process is perfect. If you're chasing an outcome, then you're only going to end up in one way.
Right. Absolutely. I think that's a very good point, is you have to have some realistic expectations. And especially when you're first starting and you see all these P&Ls, all these 1,000% options plays that people are taking in, these Lambos and stacks of money and just bands and bands of cash, where they're just selling you into this pipe dream that as a profitable trader, anybody you talk to in the industry that has been around long enough will tell you it's just about risk management, staying disciplined, and chipping away, hitting those singles. If you constantly try and bang out home runs, you've got the Babe Ruth syndrome, where you can have the most home runs as possible, but how many strikeouts did he have? Like, he was also the strikeout record for the longest time, along with the home run record. So it's either bang or bust when you have that mentality. So that's kind of where we're going to kind of flow into these event contracts, because trading futures, most of you that are watching that have followed me and follow my pre-market trading and things like that, pre-market prep, will know that I really do like futures, because it gives me the opportunity to know exactly what I'm going to lose. Just like with common shares, you know exactly what you're going to lose based off the move with ticks and points. It's just leveraged differently. Whereas options, you have the Greeks, you've got implied volatility you got to deal with. So you may still be in a good position, but losing in that option. So these event contracts kind of marry that a little bit, where you know what your risk is going to be going into these. So if we could get my charts up real quick, we're going to go through at least the 4 indices. We'll look at crude oil and natural gas as well real quick, because what I'm liking right now as I'm like looking off to these charts is that we're an inside candle right now. We're inside of yesterday's range. We're range bound here, where we're on the lower end. But what I like to see is the fact that we're pretty much a doji. Like, we're right where we open. With these event contracts, what I'm looking to do today is to straddle the price, or strangle it, really, in a way where I can get cheap contracts above or below. And with a big move in FOMC, I'm going to get paid on one side, but because I know what my risk is on the opposite side, I know what I'm willing to lose. So with the ES, we're a doji. We're right where we open pretty much. If we look at the NQ, same type of look, doji, red. So sellers are still kind of in charge here a little bit, but nobody's really in charge when FOMC day's coming.
No trend yet.
Yeah, no trend, right? So to pick a direction, and that's what I love about these event contracts, because I'm playing around with them a little bit more, using them as a way to hedge my futures positions as well. But to be able to take advantage of the spread with these things is what I'm hoping to see to trade these types of events, because FOMC, CPI, worked with CPI yesterday. I want to do the same thing. Really no direction on the Dow as well. The Russell I did just kind of skip over. That's a doji as well. The Dow inside as well. Crude oil is finally showing some direction, and it's showing a little bit of firming up here. And I am long CLE, or I'm sorry, not CLE. I'm looking at XLE. I'm long XLE. And that's a position that I'm holding for a little bit longer. And then we've got natural gas that's kind of consolidating here, not really moving the way we typically see natural gas move. What are your thoughts on natural gas, actually? I'm not sure whether you play them or not, but have you been following natural gas at all?
So I don't trade any commodities.
Okay.
So it'd probably be best if I didn't comment, because it's not my specialty.
Yeah, you're good. You're good. So these event contracts, let's go ahead and take a look at, we've got 10 different products. We've got the ES, the NQ, the Dow. We've got crude oil, gold, the Russell. We got the small caps there. We've got the Euro USD, and the Henry Hub natural gas, along with silver, copper, to round it out there for the metals. Just like you, I have not traded metals, or some of these things. Like what I mean is I'm not going to talk about things that I don't really know about either.
Yeah, I stay in my lane. I trade 10 tickers and that's it.
Oh, 10. What are the 10 that you take a look at?
Yeah, I trade SPY, QQQ, Apple, Nvidia, Tesla, Microsoft, AMD, Amazon, Meta, Microsoft.
There you go. I mean,
Yeah.
that's wonderful because that's another pitfall with newer traders is they try and scan for everything and they try and wait for people to call things out where it's
Yeah.
like, just get a handful of stocks.
And
My
I'm sure
watch
you
list is
noticed it.
very small.
I'm sure you
Yeah.
noticed it too in your institutional time, right? Like all the
Oh
analysts, all
yeah.
the traders, they don't have a scanner, right? They
Oh
get given a sector, they get given a basket of names, they get given
yeah.
a specific niche to become experts in,
Right.
and that's it. They don't focus on anything else because they're expected to know
Yeah.
everything about their little spot, and that's fine. That's what you're supposed to do. That's what I do. That's what I was trained on. So
Yeah.
I stay in my lane.
Yeah. You stay in your lane. I was part of the energy names. That's my basket that I had to
Yeah,
deal
makes
with.
sense. And
Yeah.
like there's a million different ways to win in this game, right? So there isn't like one strategy, one set of tickers, one
Right.
technique that's going to be only profitable, but there's only one way to lose. So if you can think about your risk management, then your strategy is almost overrated.
Yeah, you're right. You're right. Absolutely. So with the sectors themselves, the indices, these indices with the ES, I'm going to pull up our strike list. Okay. So what I'm looking for here is I'm looking for some contracts that are going to be further out. So if these are 75 cents, that means they're 75 cents. It's not like with the options where 75 cents
Mhm.
means it's $75. These are literally 75 cents. So what I'm going to do is I'm going to take let's just take 20 contracts. We'll take 20 contracts. It's going to cost me less than $20 to hold this position, saying yes that it's going to close above 4,200. So I am bull above 4,200 is essentially what I'm saying. Okay. So let's go to that strike. I'm going to say yes, and I'm going to place, we'll do 20. And as I do that, actually, it's only going to be $15. So I'm going to place that order. I just got filled. I'm going to go to the same here where I go to the ES.
What a risk reward, by the way.
Right. Yeah, that's a good point. I should do a little better job of showing that off, right? So where do we go here? Let's just say at 3,900 that we're not gonna close above 3,900. That's also gonna cost me 75 cents. So if I get a very sharp move off these numbers, one side is going to definitely overshadow the other, and I'm going to more than make up for the loss. And I already know my loss is going to be $15 on the long side. On the short side of this, where I'm going to say, no, we're not going to close above 3,900, I'm going to do the same thing, and I'm going to get 20 contracts on this side. And as you can see, that you did just point that out as well, I'm going to pay $15 for this to potentially win 400.
Yeah,
That's what's that?
both ways, right? You're getting 10 to 1 if you combine both your contracts.
Right.
Like that's pretty sweet. You do this trade 2 times, you're rolling.
Right, exactly. That's what I'm hoping for on this.
Yeah.
So these contracts have only been out since September, so I'm really just starting to get used to them and see what ways that I can make this work for me. And this is one of those instances where light bulb moment clicked with these events, how whippy they can get. So you're whipping around on these a lot. And with that volatility comes increase in those contract prices in either direction. So with how we fluctuate so much up and down, taking advantage of these is really not bad. So
and probably even maybe easier to get a fill than trying to play like some credit spreads on options, right? Which is a big advantage because if you want to trade decent sizing with any spreads or any kind of more complex options trade, you become quite a call it slave to the spread, right? Where the pricing that you get can be 10% different than what you actually get executed on. And that slippage is terrible when you're trying to be very deliberate.
Absolutely. I'm probably going to add to these positions, to be honest with you, because if I'm willing to lose $30 to potentially make 400, like you said, you're getting more than 10 to 1 on this. So if you know your risk, we just talked about that. That's one of the psychological pitfalls. I'm comfortable taking a bigger size with this, knowing that, hey, you know what? If I put $100 worth of this, I'm going to lose $100, and I'm okay with losing the 100 to potentially make like 4,000 plus. Then by all means take it, but understand your risk before you take it. And so for those of you that haven't traded these event contracts, you can go ahead and take my screen off, because I do want to give Michael the last word here as we kind of sign off, because we got 5 minutes till the open. Show should be over, but I've had such a blast talking with you, Michael. I enjoy interacting with you on Twitter. So where can we find you now that I brought up Twitter?
Yeah, you can find me on Twitter at DTR_trading. I'm there. If you have any questions, send me a DM. Always happy to help. My objective really, and I think can say the same thing about OG, is I want to help empower other traders to make good, successful decisions. Absolutely. That starts with your mindset. I don't think that starts with your strategy. Fix yourself first, and then it's really easy to sort of notice where everything else is going wrong. But when you start taking more accountability for your trading, you start taking more accountability for all your decisions, then that's when your trading can really explode.
Awesome. Couldn't have said it better myself. I hope you guys have a wonderful trading day. And as always, nothing but profits and peace. See ya.
Peace.